Hello, hello. Good morning, everyone. Happy Wednesday. I'm so excited for today. I'm not gonna kid you. I know we're gonna learn lots today because Lori has nothing but lots of good information for us. Maybe we'll get a little personal, maybe we'll get very technical. Who knows? Because it is that kind of day. But to start off, for our first time guest over here, hello, my name is Sadie Uribe, and I'm the media producer for the Los Angeles Regional SBDC Network. The SBDC is a national program with over 1,000 locations across the country, helping to stimulate economic growth through business advising and development. We offer no cost services to the local businesses through funding provided by the U.S. Small Business Administration, SBA, and from the California Governor's Office of Business and Economic Development, GoBiz. The Los Angeles Regional Small Business Development Center network serves small businesses throughout Los Angeles, Santa Barbara, and Ventura counties. And well, what do we do? Well, we offer no cost business advising, meaning that you can meet one on one via phone or Zoom to address your specific needs and challenges. And we also offer virtual training and programming, such as this amazing show to help and adapt and grow your business. But on that note, hello, hello, Lori. How are you?
Hello, good morning, Sadie. And we'll say pre-happy Halloween. And Sadie had the
Yeah.
most hilarious laugh right before we went live. I go, I don't know, I don't have an agenda. We'll see what happens. And she almost made a Halloween laugh. Can you make that Halloween? Okay, yes, guys. Does that not sound like a Halloween laugh? I know. Okay, I do have my beginning intro to tell you what's going on in my webinar and all that, and Sadie will put that into the chat as always. I'm keeping it brief. I am now scheduling the sales tax webinar as well as the legal webinar for November. Just hadn't got it on my calendar yet, but that'll be coming up. I'll tell you next week the dates for that. And I'm just now confirming some of the guests in November. They're kind of like switching around a little bit. But at November 6th, we're going to have Elaine Rodriguez. She's been on the show many times. She is so involved in the entrepreneurial world that I love to have her come on and just say, hey, what's happening in the entrepreneurial world? What's going on? What are you seeing in new companies starting out, etc. So that'll be a really fun-filled, exciting discussion. And then, of course, I've got all kinds of other guests coming on in November. And if you or someone wants to be a guest, I always put that out there. Please just let me know. I got a couple referrals that I'm following up on. And so always excited to hear who you guys know out there. So that's always a wonderful thing. I just left this slide in from last week. I thought it was a great way to launch Ask Me Anything. And that is revenue minus cost of goods minus expenses equals net income. Net income, not revenue, buys you a quart of milk. And you guys that have known me for some time are, that's, I'm telling you all the time, it's net income that you really need to focus on, not revenue. And I have it all the time where I'm talking to people and they go, well, I made, and they give me a revenue. And one person just could not get in their head what I was saying, where I was saying, no, that's not. And I go, okay, so you made this amount. Is it in your bank account? No, it's not in your bank account, blah, blah, blah. I had to really kind of walk her through it. And it's just a really bad road to go down, guys, because if you don't have a comprehension of where and what money you have, you can't be financially successful. I mean, think about it personally. People overspend, they get the credit cards debt, and you know what happens then. You're very stressed out, etc. And so having an understanding of what is actually the income within the company is a crucial component. Now, I have a whole bunch of, things I'm just going to chat about. And I told Sadie every time we do these, I usually fill in when I have a guest cancel or something. And then you guys have requested them over the time period. But I always start out by telling Sadie, well, I don't know how far we'll go. We'll quit early. If nobody has questions, we'll go on. And I was just laughing with her. I go, I never end up quitting early. You guys always come up with questions. So whether you put them in the Q&A or the chat, I'm kind of able to watch both right now. So I will just start talking. And if something I start saying or a thought comes to your mind, you put it in there and I'll take a look at it. And if I miss it, Sadie will read it off for me. I wanted to start out with what I call the LLC story. I don't tell this story on any of my webinars, but I do a lot on one-on-ones because when I tell the LLC story, It helps take away some of the confusion on what is an LLC. Why is it taxed just like a sole prop? Because once again, I hear so many people say to me, well, I started an LLC for a tax benefit. And I tell them there is none. It's the exact same form. And when I say it's the exact same form, it's really confusing to them. Or what happens is I've had it where I say, somebody says they're a multi member LLC. And I said, well, that's like a partnership. You're taxed like a partnership. And they go, no, no, we're not a partnership. And they think I'm misunderstanding them when I'm saying these things. And so let's talk about the LLC story. So in the beginning, there were just corporations, like think, C Corp, think S Corp, and then think sole props, right? And actually, this is not the story I'm going to tell, but the original concept for the corporation, and I read this one time, I thought was so fascinating. It goes back to Christopher Columbus. Can you believe that? So, if you look at it, Christopher Columbus was just an entrepreneur and he was going all the big heads at the time, which happened to be queens and kings that own country, right? And he's like, I got this great entrepreneurial plan and, we're going to go to India and all this, right? And so he actually was going out begging for money. Well, to fund his endeavor, he had to come up with money from several different sources, and the sources were from different places. And so they were like, well, how we got different risk. If I put this much money in, I'm at a different risk than this much money, etc. And so that's where the corporation concept was born, really. It was creating a separate entity that wasn't any one person investing and was reflective upon how much they were investing in his adventure. So that's the beginning of the corporation. But let's go back to the LLC story. So, the IRS basically saw it as you're either a sole prop, which is one person, or your partnership, which is two people, or you're a corporation. Like I said, it could be nonprofit, C, but you're a corporate structure, right? And the major difference, obviously, is one is incorporated and therefore a separate and distinct legal entity, and the other one is not. And over the years, the real estate industry is what really began this desire because they were investing in real estate projects and they really didn't need a corporation that was going to have stock because corporations have stock. That's where you get equity and you have to have stock distribution. And since you have stock distribution, even if you're a single owner, single shareholder is what you would be called, you still have to file, the stock. You have to have the corporate book and you have to have annual minutes and you have to do all the things that are required of these type of legal structures. So the real estate industry really did not want that level of complexity, but what they really wanted was to have some kind of protection, some kind of legal protection. So they first went to the IRS and say, "Hey, IRS, hey, we want to have that really cool legal protection that you have with the corporation, but we don't want all that other stuff. We don't want all that other stuff that makes it hard and confusing, right?" Well, I can tell you from being an enrolled agent certified by the IRS, they don't bend. They don't. So they went, well, no, no, no. Here's what we have on the table. We have sole props, which in their eyes, it's actually called a self-employed person, partnerships, which is called self-employed persons, or corporations. That's what's on the menu for dinner, guys. That's all you get. So if you want some fancy little weird structure, you go to the state. So that's where the LLC was born. It was actually born out of, and you've heard the term state statute. The states are the statute that created the LLC. And in that, the hybrid model was created where a owner of an LLC is not called a shareholder. There's no shares to hold, right? An owner of an LLC is called a member. And if you have more than one, it's called a multi-member. And you don't have the annual minutes and you don't have all those things. And so the LLC is registered through the state, just like corporations, and this unique little structure was created. That's why you look from state to state from state, you're going to see a little bit of differences between their regulations and rules for the LLC versus other states, right? So what ended up happening then is independent of whether you were a LLC or not, the IRS never changed the way they looked at you. In other words, say you were a sole prop sitting in a room, the IRS would come in and say, "Good morning, sole prop," right? So say you're a sole prop and the state of California comes in. The state of California would come in and say, "Good morning, sole prop," right? Now let's say you're an LLC. If you're an LLC sitting in the room and the state of California comes in, they'd say, "Hello, LLC." But if you look at the IRS, they'd say, "No, hello, self-employed person." And if you ever looked into an LLC, you would see the word, it's a disregarded entity. And people kind of fuel that statement off, but they really don't know. I say, "Go, well, what does disregarded entity mean?" What, I ask them, and they go, "I don't know." Well, it's actually literal. It means disregarded. The IRS disregards it. They don't consider it to be a true entity. And so that is why when you look at an LLC, it does offer the legal protection, but it's not offering any tax difference because in the IRS eyes, it's the same animal. It's no different, right? So hopefully that brings some clarity. You'll have to let me know in the chat, if you ever knew that, or if that story kind of helped you understand why LLCs and sole props and partnerships are taxed the same way. Now, another thing to understand is that there is a choice that people don't talk about. They know that there's a sole prop, meaning one person, but there also is what's called, and I'm going to call it an unregistered partnership, right? So in many ways, kind of in slang, that's like two sole props coming together and being a partnership. It's a different form and everything, but it's still capable of being done. In other words, what I'm saying is if you are wanting to form a company with another individual and you don't want to incorporate, people think they don't have a choice. They don't have an option for that, but you actually do. You can form a partnership, and what happens is it uses a form called 1065, and it's really kind of the same as a sole prop, except for what it's doing is the form is taking all the revenue, all the expenses, it's getting to a number, and then it's kind of separating it by the partnerships as well. And it has to do with, kind of equity, and not equity, that's the wrong word, but it has to use its basis is what the word is. The actual word is, I didn't want to confuse you, but it's basis, what your basis is in a partnership, what you brought to it. But the point I'm wanting to make is that, people don't realize that there's such a thing. Now, when you drive around town, you see LP and LLP for limited partnerships. I'm not referring to that. Limited partnerships are, you'll see them in dental firms, medical firms, architects, I think, are also LLPs, if I'm not mistaken. I might be incorrect on that one. And what it is it's basically saying it's limited. And the concept is that if one of the practicing partners, and it's usually in like a medical health or some kind of where the person is doing an activity that has great liability, right? So if the doctor, the dentist ended up harming a patient and got sued, the whole practice didn't get sued, just the doctor for that capacity, right? Now, if the company took out debt and they didn't pay the debt back, then the whole partnership is affected. So the limited liability partnerships are about professional services where they want to make the liability for like malpractice is really what I'm talking about here, is limited to each individual partner, but yet the partners can share the structure and the liability and everything from there. So that's what the LLPs are about. So I'm not speaking about that. I'm literally speaking about a partnership where you do not register with the Secretary of State. You do not. Okay. You just basically like a sole prop. You do not register with the Secretary of State. And many people, like I said, they don't talk about them, they don't see them, but especially during COVID, when I was unfortunately the main expert on the PPP and the idle loan and the restaurant revitalization. I say unfortunate because that was quite a lot to have to understand. But that's where I did see quite a bit of unregistered partnerships. The other place that I see it a lot is in a husband and wife. They may want to have the company in a partnership rather than a sole prop in case, something happens down the road. It's still a partnership company. And sometimes they want it because when you have the net income, you're paying into Social Security and Medicare, and they want to make sure that the partner also paying into Social Security and Medicare. So that's another reason. And take a drink of water because I'm going to be talking a lot today. Looking for those questions, guys. Give me the next topic. I'll keep talking, but give me an interesting topic to discuss. So that's where you see the LLP. But that brings me to, I kind of made some notes and to what to talk about, and I got just jotted them down in no specific order. Oh, let me come back. Can you repeat if the Form 1065 is the way for a couple to form a partnership? Oh, thank you. I let me say that a little bit better. So in there, if you are doing an unregistered partnership, it's not really even requiring a form, although it's a very good idea to have some type of agreement in place. But if you're a couple, you don't necessarily, need to do that. What 1065 is the tax form that is filled out. So another way of saying that is many people are familiar with a Schedule C when you're a sole prop, right? So if you're a partnership, it uses a 1065, and it's following at the end of the day, guys, it kind of comes down to the same thing. Even if you're an S corp, you're going through all the revenue, all of the expenses, et cetera, and then you're coming to the net income, and that is either the net income subject to tax by one individual or more than one. And so 1065 is the form that you use to file the taxes. So the only way I would say that I would change your question in case I'm reading into it, it's not used to form the partnership. You really don't have to do anything legal to form an unregistered partnership. It is more to do the tax return on the partnership. What about running the business through a business trust? Robert, first of all, I'm going to say I'm not an expert on all that. There's people that focus only on trust, but there's limitations on that. And I have not seen a good reason to do that. So when somebody does have something set up within a trust, there is many reasons involved. And in my personal experience, like I said, I don't want to say I'm an expert on this by no means, but in my personal experience, it had to do with long-term companies, families, passing it on, inheritance. But it's one of those things that when somebody asks me a question, I know where to go to the IRS documents to look it up. And it's one thing we're tested on, but it's not, you get asked a lot, so I don't keep it in the back of my head. But to me, the concept of I'm going to form a trust because there's some benefit that is a benefit standalone. No. In fact, if I can, Robert, that's a good question. It kind of lets me expand upon it. And, I was starting to say, and keep asking questions. This is fun. I love this. But I was saying that I wrote down, some of the top mistakes that I see people make. And one of them I wrote down is playing with these legal structures and playing with these business concepts. Like I have people, I laugh about it. So this is what I've said many times. I have had more companies that are starting up that don't have any money, haven't even made a sale, asking me about some kind of strange tax shelter than I have with my millionaires. It's really hilarious. And where it's coming from is that it is creating this situation because of people getting information on TikTok and YouTube and all this type of stuff. Well, you can do this and you can create and you can get your kids on and you can do all this. And you just really want to keep things simple and get away from that hype. You really want to do that. And Robert, I see more privacy avoiding franchise tax fees. I'm not sure on that. I can't say that for sure, because if you're going to be a company, you're still a company. You can't hide in trust. So, a trust can be a deliverance of certain income, and it could have maybe, some money that is being made on rental. I see that a bit. Like I said, not an expert, but I wouldn't go down the road saying, okay, I can hide all this, I can have a company. And where I meant by it's limited is it's limited in what the purpose of the company is. It's not like I can say, I'm going to sell online and I'm going to put in a trust. So it's very limited. So I'm not, like I said, not wanting to be said I'm an expert on it, but I would not take that away that is a complete true statement. There is in fact, I'm like got this little vision in my head on this page in the IRS book. There's this long page. I read it not long ago because somebody asked me about trust and I had to dig it up. But like I said, it's something that's an animal within its own. Let's see. Oh, I just noticed Monica. How do you borrow money using your LLC EIN? Monica, here's the short answer, and then I'm going to give an answer. Excellent question, by the way, Monica. I'm so glad you asked that. You don't. You don't. I know that's like shocking because everybody's like, here's another one of those, myths that are so untrue. I'm going to set up a company and then the company's going to borrow money. No, It's not. The money has a usage, so it's usage of funds. So I'm going to go and kind of reverse usage of funds. So the usage of funds can be to invest in the company, but the borrower is going to be you. Okay. And we talked about that. I had Max come on a few times, I don't even know how many months ago. Sadie, if you happen to find that on YouTube with Max, if you could throw that in the chat for Monica, we talked a lot about how the company is the borrower. Or Sebastian, that's who it was. It was Sebastian and I. Sorry, Sadie, it was Sebastian and I. If you can pull up Sebastian and I out of YouTube and stick it in the chat, so anybody's interested in getting more than what we're talking about here on this, it was with Sebastian. So anyway, going back to what I was saying is that the company, first of all, if you go through a bank to get a bank loan, that's insured by FDIC, and so they have to go through stipulations. And so a bank cannot even lend money to a company unless it's 3 years old, right? And in that, you really are borrowing it. It's your person, it's your FICA, and it's usually equity, home equity. Even through the SBA, it's home equity, right? And so you're not being able to, like many people believe. And I actually heard somebody, I think it was with Sebastian, we were talking about, he saw somebody on YouTube that said, you can set up an LLC and borrow money on it right away. That's crazy. It's not true. Now, you do have unsecured debt that doesn't provide collateral, and you see that as credit card debt, 25, 35, you don't get much, 1,000, you don't get much higher than that if you even get that, but that's still on your personal credit. So the company is not going to be I'm going to say the guarantor, just it's a word you would use. It's incorrect language, but it's a word you would use. It's not going to be the guarantor of the debt. It's going to be the user. It's going to be the usage of funds. The debt is going to be you. And so the company with the EIN is not borrowing the money. It's just not going to happen. So hopefully that makes sense. Okay, let's see. I have Lamar. If we have an LLC and want to create a new brand under the LLC, should we just have a DBA for the new brand or run it under the LLC? Oh, that just moves. Sometimes it moves with no paperwork. Excellent question, Lamar. Excellent question. So yes, this is, I'm going to launch into this and I need to explain a little bit for everybody to understand. Okay. So many people this is still kind of the same thing. I'm so glad you asked this, Lamar. This is the same concept. I'm saying that too many people are playing with way too many business structures. Okay. So when you have an LLC and you are wanting to do another brand, most of the time it's not like you're trying to do two completely different things, and the purposes of LLCs aren't as strict. And so it's better for you to just do a DBA, doing business as. So let's first say, what is a doing business as? So the technical explanation for doing business as is if you want to do financial transactions. Notice I said financial transactions, guy. I didn't say marketing. I didn't say set up a website. I said financial transactions. So just note that word, right? So if you want to do financial transactions in a name other than your surname, like Lori Williams, if I'm a sole prop, or in a name other than my company, like Lamar speaking of, he's got an LLC with a certain company name. If you want to do those financial transactions in a name other than those two, you get a DBA, also known as a fictitious name, and it literally stands for doing business as. Now, the best way to understand this is, say I wanted to market under a different name. I've got maybe, Business Simply Put is my company name, my LLC, right? And I do have DBAs. But say I wanted to do another DBA that just says, tax, Lori Williams Tax or something like that. And I wanted somebody to write a check to Lori Williams Tax. If it's just Lori Williams, it's one thing, that could be a sole prop with my name. But say I wanted to do Lori Williams Tax, right? Well, if somebody did that and I took the check to the bank would not put it in the bank account because that name is not on the bank account. Key, the name is not in the bank account. It didn't matter that I would have had a website. It didn't matter I had business cards. It didn't matter I stood around saying, I'm Lori Williams Tax. None of that mattered. It was the minute I wanted somebody to write a check, and I'm using a check because it's easy to understand, but I mean anything, like you want to do a credit card transaction with the name on it, then you have to have something on the bank account to allow that money to go in, okay? And so that's the first thing to understand about a DBA. Now, when people get these crazy, weird structures where they start all these multiple LLCs, then they have multiple franchise tax fees, right? They got the 800. Plus, they have to do separate tax returns, and you have to have separate records. You have to keep separate books. And if you buy anything for, this company and you're using in this company, you got to have a way to separate it. You cannot have these linked whatsoever, right? So you're creating an accounting, legal, tax expense nightmare. The best thing is to do the DBA. And now, when you do the DBA in the IRS eyes, or in the state of California, when you do your tax returns, they're not looking at like this money came from here and this money came from here. It's just this is all my revenue, this is all my expenses, and this is the net income. So they look at it no different. For you, the DBA created another revenue stream, right? Really, it created another revenue stream. But in their world, all it is more income. It doesn't make any difference to them. So it turns around and reduces the complexity, right? Now, internally, you may want to manage to say, how much money am I making from this endeavor or revenue stream versus this? So you might set up your accounting where it's got like income and it says, like I do, I have my accounting set up where I have under income, I have consulting income, I have writing income, I have speaking income, and I have consulting, through the SBDC income, right? So I know how much money am I getting from this one? How much money am I getting from this? And then internally accounting, I have my expenses broken up where I can actually go in and run a report that says, well, if I looked at just me personally, guys, if I wanted to look at my little revenue stream as a standalone, how much am I making from that revenue stream versus this revenue stream? That's highly important. Whether it's a different product, a different revenue stream, a different DBA, does not matter. It's highly important because it helps you to know where you should put your time and money. Really, that's the bottom line, where you should put your time and money. So having DBAs to be allowing you to look into other opportunities is a much more structurally sound situation. Now, I'm going to say to the contrarian, say you had a company and you had an LLC, and what you're about to do is with a partner, and you have that partner, it was a completely different legal risk. Maybe you didn't want them both to have the legal concerns. There are reasons to set up two. I don't want to say, everything is always the right answer. And that is really the takeaway. What you have to do is you have to look at the situations and you have to look at them from all angles, and all angles. And the three angles I'm referring to is that are absolutely necessity is, what will this mean legally? How many structures am I going to have? How much am I going to have to pay fees? What will this mean in tax returns? How much am I going to have to pay administrative? And then, of course, what will that mean accounting? What am I going to have to do accounting to make sure these are operating as separate companies, because they have to, or you're not legally within your right to have them as separate companies, right? So you have to look at all of these, identify the situation, identify the risk, look up, maybe sometimes, I have to go into some of the rules to see, well, can you do this and this and this? And then you make a decision. So as you can see, a lot of the decision really requires a tax person, could require a lawyer if needed. A shout out to Emma, if Emma's in the audience. Emma had a similar experience where she was, in fact, you can pull up Emma's last sequel. I don't know when that was, Sadie, Emma Green. I can't remember when that was, but she had a physical therapy company and was operating as a sole prop. And then she had another company that was offering something different. Hello, Emma, I'm telling your story. I hope you don't mind. And so she set up a separate LLC from the sole prop. And we had that conversation and we talked about that in the last show, right, Emma? I think we did, right? We had this conversation. And so I'm not wanting to say, hey, you should create a separate legal entity all the time. But in that case, Emma, yeah, this is completely different. It had to do with her professional license as well. So my main statement is really, sometimes it makes sense to have a separate legal structure. Sometimes it doesn't, and it's not a quick answer that you just get without thinking it through, which actually I'm going to stick in real quick, and I got to go back and find some of the other questions people put in, is that one of my other top mistakes that I wanted to say, tidbits of information, is that getting information from the wrong people to be giving the advice. And we do this personally as well as professionally, right? So many times, I'll say, well, where did you come up with that? And I know I speak about social media a lot because that is absolutely not a good place to get legal, tax, and finance. DIY and how to run a table saw is great. I just learned that. But yeah, tax finance, I'll keep my fingers intact with watching a DIY on table saws. But when it comes to the other things that you're involving IRS and legal lawyers, and I don't like that stuff. So I want to go straight to the horse's mouth and find out the rules, right? But the other thing is so many people are getting legal and tax advice from a fellow business owner that isn't an expert. And so you don't know, their choices may have been perfect for them or not, but you don't know if it's good for you. And so you really want to make sure that you make these sound decisions. So another big mistake is not thinking through the source you're getting the information from and making sure that it is a source that has expertise and understanding in that. Okay, I think I might, if I miss any questions down the road because they're coming in the chat and a lot's coming, I can miss them. So you just add it. Monica, if I have an LLC with drafting services, could I add tutoring service, digital products, something totally different? Is so what would I need to do to reflect these changes? You know, I'd have to look up the exact rules, but I have on several times, and I have not seen anything that is stated in the state of California other than certain things like professional license and stuff. They have different rules. But, can I sell this widget and do some consulting? Yeah, it doesn't go by the books like, okay, if I'm doing a drafting service and I offer a product, I can't. Like I said, a lot of times it's really more about the risk associated with each and the confusion in it, right? And so what you can do, Monica, feel free to reach out to me because I'm not going to answer that question thoroughly because I'd have to do some research on it and find out what products and what I'd have to get more into the conversation, right? But all I'm going to say on that is LLCs do not have that very, very strict lines. I actually looked into that some time ago because I had so many people that were asking that question. And I remember researching and couldn't find a lot that said that you can't do this or you can't do that. So, there are rules that you can't do, but they are a little bit more open than you would think. And how do you separate your revenue stream internally? What software do you use? This can be done with an Excel document, or it can be done with a QuickBooks or anything. It's not about the software, right? It's setting up what's called the chart of accounts. And that's the technical term for it. But it's basically just saying, I want this subcategory, and I'm going to make sure all the money coming in from this goes in the subcategory. So you have to sit down and be the mechanic of it. I know I'm dating myself here, guys, but you remember those things called file cabinets and file folders, and you put these little names and you put a folder and a folder and a folder, right? And you had to sit there and go, do I want the folder there? Well, if I put it here, then I'm going to combine it. And you had to sit there and think through your friggin' file folders. And we do that still on the desktop, right? Well, it's the same thing. You just got to sit down and say, what am I, really it starts out with what. This is my favorite thing. Let me tell you, this is my favorite thing when I'm talking about chart of accounts and organizing your data. I like to ask myself this question: what if I knew at the end of the year would help me to make a better business decision? So let me tell you where I'm coming from that. So I'll use mine as an example. Okay, so if it's the end of the year, I think it would be really important for me to know how much money I made from selling my writing services and how much money I made from selling my consulting services. Oh, I'm going to put those into two separate categories. And I think in my consulting services, it would be really good to know how much came from contract work and private clients. Okay, I'm going to put that in a subcategory. So that's where I would look at the end. And another way to look at when you even think about expenses, say you have a big category called advertising. And at the end of the year, you want to answer, how much did I make, or not make, I'm sorry, how much did I spend in this case on social media? How much did I spend on trade shows? I'm just making up stuff, right? Well, if you have one big, we call them buckets in finance. If you have one big bucket that's called advertising, you'd have to go through and pull out every one of those sheets and add it all up. And you're just not going to do that, right? You're not going to go find receipts. You may not even have them, to be honest with you, right? So if you don't create separate subcategories, categories for trade shows and social media, like I just explained my little example, you're not going to know the answer to that question. And Peter Drucker, I don't know if anybody in the audience remembers Peter Drucker. He was a famous consultant. He's been dead for a very long time. Don't even know how long that was, right? But Peter Drucker used to say, if you don't measure it, you can't manage it. And I love that saying. It's so true. I always equate to, I grew up upstate New York in the cold, right in the country in the cold, and you'd wear like winter clothes and sweats all, winter long. And then you'd think, okay, yeah, I didn't gain any weight. And then the jeans come out in the summer and you're like, whoa, I didn't manage that one well because I wasn't monitoring it. And I always think about that. And I think we can all relate to it, right? So, for me, to run a financially successful company is to make sure that you have your pulse on the vulnerabilities. And that means that you're literally doing physical management, financial management. You have separate spreadsheets. And, in fact, what I want to talk about, and I want to make sure I get questions first, but if we have time, I'm going to come back to what I mean about separate spreadsheets. I'm going to talk about managerial versus financial accounting, which I talk about quite a lot in all my webinars. But you want to make sure that you have a set up internal system that is not about a software program, that you did the brainstorm, you created, and you figured out your vulnerabilities, you figured out what you have to monitor, and then you monitor it continuously. So that was a very long explanation on how you manage your internal revenue streams. Let's see, Lamar, if we started off with a sole prop with a DBA, but then change to an LLC, and keep in mind, you don't change to an LLC. I understand what you're saying, but what you do is you were a sole prop, you stopped functioning as a sole prop, and you started an LLC. Okay, so that's really got to think about this like one dies and one gets born. Okay, you don't change, you don't metamorphose into one. There is some conversions you can do in, say, California, and I don't want to, say those don't exist, but we want to think about them like we start something. Do we continue to renew the DBA even though our name is on the DBA name with the new LLC at the end? No, 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 Lamar, you don't. You don't want to do it that way. So what you want to do, and it's a little bit of a process, but it's not too tricky at all. So when you look at the DBA has, like you said, your name on. In other words, another way of saying this, guys, is the DBA does not have the LLC's name on it. So the LLC does not own it, right? So if you're operating under a DBA that the LLC doesn't own, technically you're kind of piercing the corporate veil because you're using something that was for the sole prop and is registered under the sole prop. It's like mixing personal in. You don't want to do that, right? So you have to, the word is rescind. You go through and if you need help on this, you can reach out to me, but you rescind the DBA. And I did this too, because decades ago, and I'll explain, what I did is I had been operating as a sole prop for very, very, very long time, right? Back in my 20s and 30s, and then I incorporated, and I back then had my turnaround consulting firm, and it was called LW and Associates, right, where I was doing a lot of big turnarounds. And so what I did is I rescinded, meaning rescinded is like you give it up, you give it back, right? So I rescinded the DBA that Lori Williams owned, was LW and Associates. I rescinded it, and then as I rescinded it, then I created a brand new DBA, LW and Associates, of course, and the company owned it, right? And so that is how you get the DBA under the company ownership and not under your ownership. So I would definitely, definitely do that, because you are not operating with one of the main legal things, the DBA under the company, which means the bank accounts putting personal funds in too. So, it's a little bit of a stretch. Nobody's going to do it, but that's what you want to have corrected. Let me get a drink of water, guys, and we will continue. Oh, let's see. Darius, can you share a moment in your life or the personal work you do that allows you to live this life that you've dreamed of? Oh my God, I don't even know where to go with that one. I have really been living the life I dreamed of. I want to say it this way. I started not just dreaming, but believing that you can live the life you dream of about 10 years ago. I think up to prior to that, maybe even more, maybe 15, and I was starting to understand it 20 years ago. I think I was understanding it 20 years ago. But I would say the entire, veil of what I should do and how I should be and how I'm supposed to go to work and I'm supposed to work all these hours, I'm supposed to do that. I'm older, so I grew up in that generation, right? I grew up with that and I didn't quite fully shed it up to about 20 years ago. And it was a hard thing to shed because you feel like you're an outlier. You feel like, you're not doing what you're supposed to be doing. But I would say, in a very simple way of answering that, once I shed the concept that I had to do things a certain way, it allowed me to ask, how do I want to structure my life? Once I was able to ask, how do I want to structure my life? The ideas and thoughts came into play. And then when I found the limitations, I found workarounds because I opened myself up to this grand idea and possibility that you could structure a life exactly like you wanted. And I got out of my head, well, if you do this personally, you're not going to make money. If you do, all those things, I guess I'm not an artist, but the starving artist concept, right? And so once I just really eliminated all of those things, figuring out how to structure a life so I could have the personal freedom, the professional experiences, the financials that I wanted, then it becomes much easier. It's like you are trying and trying and trying to get somewhere and you get nowhere and everything seems a challenge and impossible. And then you just change one belief and suddenly the world opens up to you. So I would say that's a moment in my life when it was just then a matter of constructing it. It wasn't any more about how, it was just a matter of how do I put it together. And I, once heard the expression is, and many of you might have heard it, that you need to get out of your own way. Sorry, I've been talking all week and my voice goes like a singer, but I had to get out of my own way. I had to believe in myself. And that was the main distinction. And then once you do that, you never go back. I have people that tell me all the time, and I think I've been this as a kid, they tell me you can't do this, you can't do that, you can't do that. And I'm like, God, if I didn't do any of the things people like said I couldn't do, I wouldn't have done anything, right? So I even yesterday was wanted to do something. I talked to somebody, well, you can't do that. And I go, oh, that means I could. I just got to figure out how. So I think it's really an inside job first to believe a possibility of what you want. And then once you believe in the possibility, all the answers, solutions, and avenues to explore will come your way. Darius, I don't know if that answered your questions or even got close, but I hope it did give you some kind of an answer. Anonymous, why are some reasons why someone establishes a nonprofit as a legal structure from the LLC? First of all, they're establishing a nonprofit as a nonprofit. That's a corporation. So it's not a LLC that's a nonprofit. It's actually a different type of company. And it really has to do with is the revenues donations. I mean, if you really look at a nonprofit, where are you getting the money? It's donations. And I'm making it simple, but it's such a logical thing. And people don't think about this. They go, I'm going to become a nonprofit so I don't pay taxes. I'm like, you gotta ask yourself, do I want to sell something and go out and get customers to buy it? Or do I want to go around and ask people to donate? I'm not saying one's right or wrong, guys, at all, but you can see there's a complete difference in saying, look at my really cool product. Do you want to buy this? To look at my really cool mission. This is what I want. Do you want to donate to my mission? It's a different buying. The person who's donating money to a nonprofit is buying something as well. They're buying a feel good, right? So it's all about buy. It's actually, I call it about trade. To me, the whole world is I trade you very much. And I'm not saying that in a negative way. People hear me say that and they go, oh my God, that's so terrible to say. But I don't mean that. You know, in a nonprofit, I'm going to trade you, feeling good, and I'm going to get to do the things I want to do. In a company, I'm going to trade you some money and I get your product. It's always about a trade, right? And so it just is a matter of the business model, what it is about and what you're trying to do. So it's not the deciding whether you want to be this legal structure, this legal structure. It's really saying, what is the business model? What am I wanting to do? What am I wanting to experience? What am I trying to achieve? Do I need to be incorporated today? Can I just take and go slow? That's the other thing that I put on my list of top mistakes. And it's like, people don't understand that you need to learn to crawl before you walk and before you run. We know that, right? And that's how businesses used to start, crawled a little, sold prop, sold a little thing, then they sold a little bit more, and then they had a little shop here, and then they created another one, and they kind of just slowly and stability, very, very solid foundation grew, right? Well, since entrepreneur became Hollywood, you guys, I say that all the time because I think it's hurt the entrepreneurs with this Hollywood aspect that's come to entrepreneurship. It's like, oh no, don't crawl. No, don't learn to crawl. Don't learn even to walk. You need to run. You got an idea? You need to be an LLC. In fact, you're going to get investors and you're going to do all this. And it's just crazy talk, guys. And so the companies I see that are succeeding, like I've said before on the show, are solopreneurs, people that are just taking little baby steps, seeing where it gets them, choosing something else, keeping their debt zero or low, self-funding, figuring out a pathway, and then eventually growing it. That's, that crawl, walk, and run is always the way things happen, always the way things happen. Chris, what is the advantage of an S corp? Well, are you speaking of, Chris, are you speaking of structuring as an S corp? Are you speaking of taxed as an S corp? Give me a shout out on which you're thinking of so I can answer that specifically. And while you do, I'm going to comment on the BOI reporting from Anonymous. I'm glad you brought it up. I bring this up constantly, and I didn't bring it up because I'm always talking about the BOI. So that is the beneficial ownership information document. And in January 1st of this year, the federal government, which is FinCEN, which is part of the US Treasury, you may have never heard of FinCEN, but if you did, it would be through money laundering. They manage money laundering. So the federal government decided that they wanted a database that had in it who the owners are of all companies. Now, they already have a database of the companies like the corporations that are on Wall Street and anybody that's a bank, et cetera. They have all the information from them, right? But they didn't have a database on your little company, okay? They didn't have a database on that. And think about it, when you set up your LLC, for example, in California, you didn't upload your passport, tribal ID, driver's license, none of that, right? So the federal government decided they wanted a database with that information, so they started making it mandatory that all companies fill out beneficial ownership information. You can go to the BOI page, and if Anonymous, if you need any help with this, Sadie's put my information in, you can reach out. I'm not going to go to the website right now, which I usually do and show. It's a pretty easy form to fill out, and you can even download a sample form to see it before you fill out. But it basically asks the question of, well, what the company is, who the owners are. Like I said, you have to upload an ID, addresses, etc. Now, if you were formed this year, you've got 90 days to fill it out. And let me back up and say that sole props go like this. It doesn't affect you. It's only if you registered with the Secretary of State. So sole props, no. So if you formed this year, you get 90 days to fill it out. If you're forming next year, you get 30 days. If you form before this year, you got till next year. If you form before this year and then you close the company this year, you still have to fill out within, I think it's 30 days of closing the company. So you really can't get out of this in any way, shape, or form, okay? Or form, no pun intended. So the fines, believe it or not, are $500 a day up to $10,000 and 2 years jail. So there's the BOI. If you haven't heard about it, I try to talk about it all the time so people are aware of it, because a lot of people don't know. So if you have not been aware or have not filled it out, please do a shout out to me so you can understand what that takes. Chris, for tax purposes. So I'm going to have to make it a really short answer, but keep in mind on my legal structures, and I actually am thinking about making a webinar that just talks about this completely, and you can also set up an appointment for more information. But I'm going to say it when you get to a certain net profit, not revenue, net profit. Remember the thing, all the revenue minus all the expenses equals net profit, okay? So when you get to that, what happens is, if you are, I'm given a number and I'm already going to be wrong because I'm given a number, but just get a feel for it, okay? If your net profit is ranging 40, 50,000, and it will be for 5 years, there can be a tax benefit. If your net income is not, or it won't be for 5 years, it's actually going to harm you possibly because you're going to pay out more in administrative, etc. So there's a major shift that happens when you are taxed as an S corp, where you're no longer, remember my story at the beginning, self-employed person, you're actually an employee of the company. And so the savings is only on the payroll taxes, That's it, the payroll taxes. People think it's state and federal. No, you're still paying the same. And so what has to happen is it has to balance out. So your net income has to have high enough to save on these payroll taxes to offshoot the other expenses. That's why it's got to get to a high enough level, because it's a completely different accounting animal. You got to get with a tax person at the beginning, at the end of the year. You got to do a W-2, you got to do a reasonable salary. So, you do have a tax saving. I mean, I'm an LLC taxed as an S corp. Believe me, there is a tax saving, but it's a tax savings that only comes into play when you're making enough money, okay? When you have enough consistent net income. So that's like the quick answer, so everybody gets an idea on it. And the longer answer, like I said, I can get into on a one-on-one. Hey, Charles, thank you for grabbing the website for the BOI for Derek, because I'm like doing too much right now to do it, and I felt bad that I couldn't grab it. So that is the website, and I am going to do something really quick on the BOI. I just launched it from Charles. How do you like that? Thank you, Charles. You're helping me here. So guys, real quick, hold on, real quick here. I want to show you something. Sadie, you can see the BOI. I got so many screens open, right? You can see Charles's website, right? Okay, yeah, there's a better page to go to that actually will take you right there. This is it, Charles. But you know what I'm going to do, guys, is I'm going to do a quick grab. Give me 1 second here because I want to make sure you guys have this. So while we're on it, let me do a quick grab on something here, okay?
Hmm.
Hold, let's see. Let me grab something for you. Okay, back. Okay, everybody, BOI, quick second on training something on the BOI. Okay, so Sadie, I want to put this in the chat for you. Oh, I got it right here. What am I talking about? I'm so used to you. I
It's all
got
this
the power.
multitasking today.
I got the power. I'll do it. Okay, it's in the chat. This is where I am, guys. Okay, I'm going to click fast. Reach out to me if you need anything. Go to this page. You see where it says file using I got to move this stuff out so I can hit it. File using the BOI filing system. Click here. Okay. I'm on everything happen at once. Okay. Beneficial ownership information. Get started. Click here. Here's a cool thing. So you're going to go here to file online, right? But you can prepare and you can click this and you can see it's downloading, right? So now I'm
Mm,
like totally multitasking here, guys. What
I
this
love it.
do is, so let me come back here. This is BOI in 2 seconds. And I also wrote an article on that. I go through all this. So like I said, if you need more, but this is BOI in 2 seconds. Check it out what it downloaded, guys. It's the form. You can cruise through it and see what you have to do before you do it, okay? So hopefully you guys followed me on that. I went through it, and you know what? And put it in the chat if you need me to at the beginning of next week. I'll go through it in slow, but that's a take on the BOI and how you can look at the form and totally see what you're getting into before you do. Okay, cool, guys? That is it. I now have to go back and see if I missed any questions here. I'm not sure. I may have, because a whole bunch of stuff has happened. So if I missed your question, throw it in the Q&A. That's a way for me to absolutely see it. When you put it in the chat, I kind of miss it with everything going on in the chat. But if you got any more questions for me, or if I missed one, guys, throw it into the Q&A.
Well, I have one for you, Lori. That is in a
Okay.
nonprofit, do you really only make money through the reasonable salary you give yourself as opposed to net income and for profits?
Yeah, you do. You and reasonable salary, correct, and it's not really used as a reasonable salary because that's a concept in the IRS for S corps. But yeah, you're not going to get the not net income like you would, because that goes back within the company. And so that's where you have an amount that you get paid that is appropriate to the, nonprofit, right? And you see that a lot come up, these executives are making X amount and that's not appropriate. So you got, certain situations where your donators have to also be comfortable with that, if you will. Otherwise, you're not going to get more donations. in many ways, if you think about it, if you get your product priced too high, people aren't going to buy it. So it's kind of the same, if you get your salary too high, your people who are donating are like, wait a minute, no, I'm not donating. You're taking all the money out. It's kind of in many ways the same thing. But yes, that is correct. You're not sharing, you're not getting the net income. And that's why I say it really has to do with figuring out what is the business structure you want to do, what is it you're trying to achieve, and then figuring out the right business structure to do so. So and I don't see any questions. I'm going to run through. Oh
Ooh,
boy, wait, I see
just
one over
one,
here.
but two. Now
I
they're like, oh, no, don't leave.
Okay, yeah, I was just gonna, go through a couple ending things, but let me go back and grab this. Okay, let me read this one. Behind on a few years on my business taxes, but I lost my business during COVID and ended up homies. What point should I walk in the IRS? You should walk in the IRS immediately, to be honest with you, because what happens is, and here's one thing, I'm going to answer this one thing too. I didn't know this until I became an enrolled agent. The penalties to not file are more than the penalties to not pay. I'm going to say that again, guys, so you can get that. The penalties for not filing on time, obviously, is what I'm saying, is higher than the penalties for not paying. And the penalties will kill you and they will make payment plans. So it's like many things in life, the more you avoid it, the worse it gets. So the best thing is to get with them and get a payment plan and stop the penalties. Because when you look at some of these situations, it's the penalties that kill people. And another thing about not filing is you don't get the statute of limitations. So not the best. I didn't know this, like I said, guys, until I went through my enrolled agent certification, and I realized how not filing is the worst thing that you can do. I actually knew somebody didn't file for years and got caught, and it's a pretty ugly scene, right? So I would say the sooner, and the other thing I'm going to say personally, whenever we are in situations, and life happens, guys, you know what? Life happens. We get in situations, or, in COVID put us in situations. Life is ugly in many ways, okay? But whatever is not good in our life and we are avoiding it, not only is it getting worse, but we're not living healthy, we're not living happy. It's always that ghost that is haunting us. Halloween, right? It's always that ghost that's haunting us. So for me, it just seems like the sooner you can attack whatever it is you have to and get a plan in place and go forth with it, the better you feel, and the more magical life can bring to your world. Because what I find is that when you have this something over your head, the energy just gets stuck and you can't create anything, and it just spirals down. And I don't think it does us any good. And you also end up with, health issues, et cetera. Not trying to be a lecture on person. I don't mean to be. I'm just telling you my personal views. So I think that for me, anytime something comes up, I'm just so proactive. I want to go, okay, not sure what this one, got to get it right, got to do it right, because you just don't want it over your head. So that's how I would look at it. Any tips on talking to a decision maker at the top of a bureaucratic organization in the presence of employees below them? The goal is to build rapport. I'm not sure the situation I'm talking to, so I can't speak on it itself. But at the end of the day, I'm just going to answer kind of a pet answer, and it sounds like a pet answer, but I think honesty and just communication is always the answer. You know, I think that the words that need to be said don't need to be said harshly. We don't need to be harsh. We don't need to be cruel, but I think we need to be honest with ourselves and we need to be honest with others. And so whether it's something to say that's pleasant or not, I try to be honest. And what I find, and this is the key of my answer here, is when I approach with this persona attitude, I don't know the right word I'm trying to use here, I become human. And the bureaucrats who tend to be more like, okay, next, next, next. It's not always, because we can't, predict other people's behavior, but it does help sometimes for them to be human. And then they actually have a human discussion. So I think whether it's a bureaucrat or what have you, it's really approaching the same thing. And remember, we can't control other people's activities. We can't control other people's thoughts. We can only control our activities, our thoughts, our behaviors, and that's where to start. So that would be my answer. I hope it's an okay. I don't mean it's okay. I don't answers your question. I didn't mean to say that. I hope it answered your question to some degree. And I think that, like I said, it's really a question about anything and how I would approach it. Should I have a lawyer instead of going by myself? I'm not sure what you're a lawyer. Oh, I see it's this question that, once again, could not answer that. I could not. I have no clue what we're talking about. But if you feel as though you need representation, absolutely have representation, right? So you might be talking about going in front of the IRS and representing you in front of the IRS. I'm not sure what you're talking about here, but if you're talking about the IRS, depending on the situation, you may want to hire somebody that can represent you. Tax people, EAs can represent you, CPAs can represent you, lawyers can represent you. So yes, so it depends on the situation. When it comes with the representation, if you're going in to set up a payment plan, there isn't really a lot of wiggle room. Where representation comes, and I'll just go over to answer this, it has to do with precedence, right? I know that's a really word to bring up, but in law, we talk about the precedence. What can we use in precedence to argue our case to, alleviate some of the fines, et cetera? And that's what the representation really comes into play. If it's, I didn't file the tax return, I didn't do it, and I owe this money because I made money. There could be, I'm not answering a specific question, but there could be, the ability to represent yourself because there's just not a lot of argument. I use the word argument because that's what it is, argue in front of the IRS, argument. There's not a lot of argument in it. So it really depends on the situation, but they do have conversations with you. And I've had to talk to the IRS on several accounts for clients, and they do sit down and talk with you. So I really think it depends to the degree and your comfort zone. So I would say it's to the degree of what it is, to the degree that there is a precedence that can be argued against it, and your comfort zone in having that conversation for yourself. So that's how I would answer that. Sadie, we did not, you're very welcome for that answer. Sadie, we didn't quit.
Yes.
I still have my list
No,
here.
no, I'm telling you, this is how it always goes. It's like, it's one of those things like you started off with the LLC and it's like, and it just keeps going. We could do this for hours, Lori, hours.
We could do this for hours. So I guess shout out to everybody. You want another Ask Lori anything before the end of the year? Because I was like I keep thinking, you guys don't want to hear me talk for a whole hour. And then every time I do it, you do. So yeah, okay. I was thinking.
Chris says yes. You were barely allowed to get a little drink of water there. Like I even heard your throat. I was like, oh my God.
I know. Well, I can talk about anything, man. It's so funny. I think about it when I was a little kid, my father especially would say, "Don't you ever shut up?" And I think about it. I go, "Well, good thing not, because I get paid for that." The more money I get paid, I'm not going to shut up. That's my money. So little did I know that would be it. But I will create another one because I had this great, whole thing. I had this like top 10 mistakes that people make that I've seen over the years. So we'll have to come back and I'll get through some of more of my top 10 mistakes. So thank you everybody out there. Like I said, it's always my pleasure. I want to thank the frequent flyers that have been here with me for so long. Doing Small Biz Talk was a dream for me. I'll end this by telling you the story behind Small Biz Talk. During the pandemic, I mentioned that I was the top person on the Idol and the PPP, and it was very challenging. And every week I had to do these webinars where for like 1 hour, it was just me answering these questions. And they would be, sometimes there was like 1,000 people, and I would just have to talk about everything from tax to finance and answer all these questions. So after I did that for almost a little bit over a year, I said to the SBDC, okay, you owe me. I want to be a talk show host. I want my own talk show. I want to, I want to do this, right? And I want it, and my whole concept, I said, real people, real discussions. I don't want a Hollywood one. I want the clients from the SBDC to be on. I want small companies. I want small time experts. I want us to have a conversation that says the truth. It's hard. We succeed. Sometimes it doesn't succeed. We got to try again. We can't really get money like they say we can. This is really the way it is. And so eventually they got everything together. And then I thought, well, I'll do this for 6 months. It'll be fun. And now, as Sadie can contest to, it's become such a big hit at the SBDC. I couldn't quit if I wanted to, but
We won't let you quit, Lori.
They won't. So this idea turned out to be a big hit with everybody, and it's really a shout out and thanks to you guys that are there with me every single week. It is the highlight of my life. And one of the things that I just want is people to be able to wake up and understand that every single decision within their company is first a financial decision. Because to be quite honest with you guys, I'm seeing too many out there that are thinking they're going to eventually make money, but they've got broken cost structures and they're just going to be more tired and more broke. I'm seeing way too many of you out there trying to make it work on a cost structure financial. You're selling too low of a price, your profit margins are not there, and you're like a little hamster spinning. And it breaks my heart because you could make some adjustments, you could know your financials better, and you could get in a better situation. So that's part of my mission in what I do with consulting with small companies with my high level experience that I have and understanding is trying to get you guys to be successful because I started in the country, a small little town, everybody had their own company. I don't care how far I get in my life, I'm still a little country girl believing in the one little mom and pop shops. That will always be that way. So with that, I'm going to end it and say thank you. Sadie will stay by to make sure everybody's got my information, anything you need to know, and you can always reach out to me for more. And I will see you next week. And thank you, Sadie, for being there. But for now, I'm out of here. Bye, everybody.
Bye.